Long-term analysis of Rheinmetall, ticker RHM. Completely insane. We're talking about more than 4,000% over the last, 5 years. Completely insane. Like, the key question is, like, will it continue or not? We're talking about military industry. We're talking about, ammunition, tanks, and so on and so forth. So right now it has a market cap of 72 billion euros. So it's completely nuts. And the thing is, like, the upturn is continuing, as you can see here from the screen. So read the disclaimer right here in the video description below, and also join us, Train HT, subscribe to our YouTube channel to see more analysis like this. We're gonna study the fundamentals, the technicals, and more. What we can gather here from the net income, actually, this is very interesting, because even though the stock is skyrocketing like never before, and you can see the net income is completely sideways. We're talking about the last quarter was 84 million. The previous one in December, usually December is the best month, the best quarter. The last 3 months of the year normally are the best for this company. Probably the military industry as well. But the thing here is, like, generally speaking, yeah, we're talking about the numbers are increasing. We can get the numbers actually from 2021. We're talking about 300 million mostly. And the next one, 2022, 474. The next one, 2023, 535 million. We're talking about net income, remember? And the last year, 700 million. So that is increasing. Probably, this conflict in Ukraine produced that effect as well. It's contributing to that effect. And probably it will continue to do so. But it's like, is it justified the price action skyrocketing like this? Like completely crazy in comparison to the net income? Because yeah, it's increasing, but it's not at the same speed. I would say it's increasing less than the price action, interestingly. And actually, it's like, if we go to the forecast, we have here modesty analysts analyzing the stock. We're talking about 16 analysts, and the average is like the stock should go up only just 6%. The most pessimistic one minus 38%, and the most optimistic one more than 30%. More than 2,000 euros per share. So it could happen. Yeah, maybe it could happen. But it's like, at this point, I think the EPS is very weak in that sense. It's like we're talking about reporting earnings that are worse than the estimate. But it's like, is it enough? I would say, as long as this hype in this military industry, it's fine. I mean, this stock, they are going to continue to go up. Maybe there are some sort of corrections, but as long as the military spending is increasing, this will continue. And actually, we have breaking news today, which is insane. They're gonna allocate 5% of GDP in all European countries. Or all NATO countries, they're gonna contribute in military industry about 5% of GDP. So that's completely nuts. Like that's the most huge expenses ever in military over the last probably ever. So if that happens, they will continue to increase. We're talking about Indra in Spain is also making new highs. All the military stocks are making new highs here in Europe. Not as much, not as many in American companies, but still they are increasing as well in the net income. But the thing here is, like, the EPS is telling us the truth, and the truth is, like, look at this curve that we have right here in the revenue EPS. So this information has been updated. So it's taking into account this increase in military spending in the future, by all these countries. Probably this could be even better than the estimate that we have right here. The reality could be even better. But when they update this information, probably right now we have an EPS, an estimate of the EPS by the end of 2025 of 29.63. But probably they will update this accordingly in the coming months as soon as we get more information. So we're talking about, for instance, if they change this military spending to 5% of the GDP, probably this information will be updated again, and we will see an estimate of 35. So that means that if they do that, the stock will continue to go up, because price action tends to follow the fundamentals. And if we increase the net income, the price action, it will continue to increase. The only risk that we have, obviously, apart from the market crash, the general market crash, that's the one that happened right here. You can clearly see this market crash caused by Trump. You can clearly see right here when everything was like we're talking about at this particular moment, they started to apply these US tariffs worldwide. But apart from that, the only risk that we are facing right here is like if they end the war in Ukraine. I mean, it's not that they're not going to continue to increase the expenditure in military industry by all these countries, but obviously peace would create that effect. Peace can create an effect of a downtrend in military stocks. It could happen, for the short term. For the long term, I would say it's a good play right here. You're talking about like they're going to continue to increase their net income. That's the important thing. I mean, at the end of the day, Europe is not going to stop investing in military industry at this point. They cannot afford to do that, especially after what happened. So they probably will continue to do that. They will continue to invest, and in military industry, it will continue to happen. And probably most of the allocation, the funds that are going to allocate for that are going to be like spent, in European countries. Yeah, I'm sorry, and European stocks. Well, like this one, So this is like all for now. Leave your comments below about what do you think about this one? Is this a good one for the long term? Buy or sell? Leave your comments below and see you in the next one.